Today, a quick lesson on stock chart reading. Reading the basics. This is really for beginners, kind of 101 stuff, but also I have to say that it is also for not only stock charts, but Forex, futures, anything that you can chart. And sometimes it's stuff that even intermediate or advanced traders forget. So it's a simple lesson, but a very, very important one. So here it is. By the way, I've got the Disney stock here, 5-minute chart. That's really not consequential. Don't worry about either one of those things. I had to put something up, some market, whether it's Forex, stocks, futures, some time interval. You can do this with daily charts, weekly charts, tick charts, whatever. So what I'm going to share is agnostic with regard to the symbol and with regard to the time frame. It has to do with scaling. And this is very important because technical analysis is very visual. So you look at a chart like this, and it looks like something's actually happening, right? So you could look at this different ways, could put different indicators on here, whatever, but I'm just looking at price action here. So it looks like we've got this move down, this little move up, this move down, and it looks like, okay, there's something actually, going on here. And we'll just kind of cover these little areas here, and it looks like, all right, there's something that might be decent to trade there. All right, now let me show you something. And lo and behold, fasten your seatbelts, because as I scroll back, look what happens. All of a sudden, that range of that market, what it looked like visually just to the naked eye, doesn't look so good anymore, does it? No, it hasn't moved very much. So now, just the visual impression, again, to the naked eye, this kind of stuff here is not really that significant. This is pretty much just going sideways, pretty much a sideways market. So here, sure, we got a pretty big move down there, and then we'll move up, and then all this is really just a sideways from there on out. So what is it? It's just purely perspective, right? That's how it looks to the naked eye, and it all has to do with how you scale your charts. So here's what I recommend. A lot of times, and I'll show you on TradeStation. Now, I'm sure I'll probably get a lot of questions about, well, how do I do this in this charting software or that charting software? All right, I don't know all the different charting software programs out there. I'm not familiar with them all. Sorry. If I knew how, I would definitely tell you, but unfortunately I don't. So I'll show you here in TradeStation, and then go to the discussion boards or the help desk or support or the forums, whatever, and learn how to do it on your charting software. So again, you want to go to scaling. The question is, how do I scale my charts? And so what we have here in TradeStation right now is I have it set to automatic. So it is doing the scale range based on the date range on the screen. Okay, so what does that mean? By the way, there's a couple other things. We'll come back to those as well. So what that means when you choose that setting is that it's going to look at the high and the low that's visible on the chart, and it's going to automatically scale the chart so that the visible high and the visible low stay on the chart. And what that will do is change your scaling as time goes on. So right now, look, for example, we have 20 cents between each of these markers here, right? Oops, I actually grabbed the wrong thing I wanted to grab there. Okay, so 20 cents between each one of those. So as I scale forward, let's see what happens. Whoa, what happened? Okay, now between each marker, there is what? 5 cents. 5 cents. So you see how it changed the scaling? Because that type of scaling is going to always keep the low visible, and it's always going to keep the high visible, the low and the high that's visible on the chart, and it's just going to fill the chart with that. There'll never be any black space at the top, never any black space at the bottom, and therefore it's going to change the scale. And that can be very visually deceiving. All right, and as we go back here, see again, it's always filling it up. So like, for example, here, this whole range down here, okay, we see this as pretty much a sideways, whoops, I kind of missed some area there. All right, pretty much a sideways move, right? And that's because we got this big move up here. And again, 20 cents between each of the markers on the y-axis. Now, if we scroll back, let's see what happens. Well, okay, but see how it's got the low there and the high there? Now, if I were to actually expand the, this is another thing you can do, expand it there. So we just get that. There we go. That's our narrow range market that we were looking at. That before looked very narrow range, just sideways. And all of a sudden, it looks like, oh, wait, there's some major swings here. That looks like, oh, that's a pretty significant swing down. That looks like it's a pretty significant swing up. But no, again, we're back to 5 cents between the markers, and that's why. So that's a problem, or it can be a problem. It can be a problem. And for most people, I think it actually is. Because, again, visually, and if you can see, I'll just do this, boom, okay, there you go. We're back to narrow range here, right? Now, see, now when I change this, now, part of what would, part of the price action that would normally be visible, it goes off the bottom of the screen and I can't see it. And look, there's black area up here. It's not filling the chart. Now, I can actually pull it up. And with TradeStation, at least, some trading platforms allow you just to manually do this. So I'm left clicking and I'm holding the left mouse button is what I'm doing. And just scrolling up and down. So I don't have to actually go into that the setting. And others will let you, and TradeStation allows this, which is cool. Just, again, left click in the middle of the chart and move it around like that. So those are a couple of different ways you can do it, at least on TradeStation. But my point is that you want to have a set scaling, right? This is the bottom line lesson. So you want to set this to whatever. Now, it's going to depend on the price of the market. You know, the stock's over $100. So if you're dealing with a penny stock, obviously, you're going to have it set at a different scale. The future is different, Forex different, whatever. So you decide on what scale is meaningful for that market you're trading, where you're going to see consolidation is going to look visually like consolidation and not fill the whole chart from top to bottom and look like something's actually going on, like there's real movement there, like there's going to be a good reward to risk ratio. You want to be able to see that, oh no, this is just choppy, sideways, consolidating market, all right? So it's going to vary as far as this goes. You want to set this to a value that is consistent at all times, at all times. So every time you look at it, your eye will get used to the patterns and not be deceived by the variable scaling that would otherwise naturally occur. And then as the market goes on, yep, sure, sometimes, yeah, let's see, I'm sure it happened here. It goes off the top. So what do? We do that? We just drag it down. That's it. That's what you got to deal with. So you got to do a little manual work with it. Now, there might be some trading platforms out there, maybe even TradeStation allows it, where you can set the scaling here. In fact, I'll just go in here and show you this. So they have all kinds of other things you can do. So you can do automatic, change date on screen, entire date range. Then you can do a percent above or below so that you get a little black area above and below. And then now, here's the other thing. If you add your technical analysis technique, so let's say you're putting on there a 200 period moving average, for example, that would be a good one. So the 200 period moving average, if you want that to show and doesn't run off the bottom of your chart, which it will sometimes, then you would click that. All right, so if I did this, and actually here it is already checked, pre-checked, expand the range to include technical analysis. So then a long-term moving average, it's going to show that on the chart. Well, that's going to, again, skew the price scale, the scale of the price. And because now it's going to show a moving average that may be way below the price level, but it's going to move that chart up to show it. So it's visible on your chart. That's another thing that can really mess you up. So if you don't want that, you deselect that, of course. And then there's all kinds of other stuff you can do, subgraph menus. You can fix it. Here's where you can actually fix it to a minimum, maximum. Now, this is for price. Okay, and then here, yeah, this is the one you can do to movement size. So 1 inch is going to be 5 points. So if I click on that, yeah, not so bueno, right? not so good. But this is where you can fix it. So we say, okay, and you just got to play around with it a little bit, right? So we say, well, that is too tight. So let's make it 0.5, and let's see what that looks like. Okay, there we go. So now we got something that's good. Now that will stay, but now you got to be careful. You don't want to change this. Watch this. Give you some little extra tips here. See, as long as I didn't change that, well, yeah, it's already got it at that right now. And so now we're going to be okay. But if you go in here and you change that, okay, now you're screwed. Now you're messed up again. So you've got to keep it the same. Now, again, I would use different numbers for different time intervals. So it's not just different markets, but different time intervals as well. So this is, what is this again? 5-minute chart. Okay. So you decide on what increment here is good for your y-axis. Let's say it's 50 cents. You decide, yep, that's pretty good. Now, if I were to use a 60-minute chart, let's say I'm using multiple time frames, well, I'm not going to use 50 cents on the 60-minute chart, right? Then I'm going to want to have a wider spread, a wider range between those hash marks. So just decide on what's good for each of your markets, for each of your time frames, set it and never change it. Otherwise, it will be deceiving to your eyes. So simple tip there, but one that I find makes a big difference. Sometimes where I find this really gets people in trouble is when they don't know they're in a consolidating market, right? And, again, this shows this consolidation here very, very well. And if it fills the entire screen, then people think, oh, that market's actually doing something significant there, and they're trading it, and they get chopped up. So this is one very practical tip on how to avoid getting chopped up in choppy markets. All right, so now, by the way, I've got a special course available for you that I'll absolutely give you for free. And in it, I give one of my favorite trade strategies called the Rubberband Trade. And you can get the Rubberband Trade, all the setups, the details, where to enter, where to get out, all the parameters, the rules, the filters, everything absolutely free. Just click the green box there in the top right-hand corner, and I'll give you a little mini course that includes my Rubberband Trade. Also, if you're interested in more videos, please let me know what are the topics you would like. You can leave that down in the comments below. If you like the video, share it with others. Share good things with good people. That's one way you can give back. I don't run ads on my video channel, as you know. And so all I ask is that if you liked it, again, just be honest. If you really liked it, then go ahead and share it with other people. And give it a thumbs up and all that kind of good stuff. Okay, my friends. Well, hope you got some value out of this lesson, and happy trades.